Today, we're going to be talking about Affordicare Insurance's flagship product, Champion Health. And as most of you know, we've been in business almost 15 years. We have over tens of thousands of agents across the country, helping millions of clients save billions of dollars without ever asking for anything up front. And that's allowed us to work with some of the titans of industry, with some of the largest companies in the US, and also the ability to help some of the smallest companies down to 5 employees and everywhere in between. We have every possible integration to work with every major and minor payroll company. And the idea on this is that we're not replacing or competing or interfering with the existing broker or their existing major medical plan. And while it's designed to be a complement to help offload a lot of claims and prevent some of your small and medium claims to hit your major medical and helping a lot with loss runs and renewals, it can stand on its own for a lot of the employees that don't have any other coverage. And so, unlike a lot of plans that usually ask for the employer or the employee to have a net negative or a pay out of pocket for these benefits, between our pre-tax benefits and our post-tax payments, we actually have a way that the employees actually see a net increase in pay with participating, and the employer actually always comes out ahead. So the actual pre-tax portion of the plan is, think of it as a super MEC coverage or minimum essential coverage that covers all the preventative visits, plus all the urgent care, the doctor visits, the urgent care with $0 copays, an unlimited number of uses, and including prescriptions as well with a $0 to $1 copay with everything our formulary covers as well. So not only does this provide benefits for 100% of the population of every employee, but it, like we talked about earlier, it has a tremendous ability to prevent claims from ever hitting their major medical, where the employee would have the second ID card, and they would be able to show this to any provider. So instead of paying a $40 or $75 copay for an urgent care, they can now show the Champ card and pay nothing. And so on top of the in-person benefits, they also have then their own direct primary care doctor that they can use whenever they want, 24/7. So for instance, a child has an ear infection at 2 in the morning, you could call a doctor, you could get that advice, you could get a prescription filled, and then you can even get that filled all for free. Same thing with mental health, everything from a childhood psychologist to marriage counseling to depression to anxiety and everywhere in between. The ability to give all your employees access to care without ever asking for anything up front for copays or deductibles is a huge benefit. And then on top of that, we even include like veterinary care for their dogs and cats, virtual physical therapy, and a ton of other really cool benefits that are really useful for immediate day $1 coverage. And how they earn that is effectively, instead of paying with it with their own money, they're effectively filling out a what's called a health risk assessment or an HRA, and just is designed to kind of give a baseline for the employee of kind of where they're at, how they can improve. So very similar kind of to like a safe driver app kind of for your car insurance. This is ways that you can see which ideas and benefits are things that are going to help you over time, things that you maybe struggle with or you can improve on, ways to make those better. And so one of the tools that we have is the ability that you can use your front facing camera of your smartphone and scan your face with your skin being translucent. It actually gives you the same type of readings that like your Apple or Garmin watch would, but in real time actually from your phone. So it actually can tell you like your blood pressure, the chance of having a heart attack or a stroke, your body mass index, the age of the skin of your face, your overall health, basically, which is not only a super, super cool for thing to keep your employees kind of going back to keep engaged, but also the benefits that are happening here are very similar to how if you went in for an annual physical, you'd step on a scale, you'd maybe ask some questions to your doctor, they'd take your blood pressure. And so the idea is that this is simulating virtually an annual physical. And just like the other hundreds of different things that we can help the employees do, are all medically based actions tied to a CPT codes with an actual medical provider adjudicating these actual claims. So the idea is that by these actions already having happened with the post-tax portion of the plan, then the EOB, or what's called an explanation of benefits, just as simply the receipt that says if a medical event occurs that a doctor adjudicates an EOB, we can pay you a medical insurance claim payment, in this case with a post-tax dollar. So how this would look on someone's actual paycheck, somebody's making, let's say, $3,850 a month, and they're paying $690 in taxes. This month, the employees that have gone on, they've completed their HRA, and now we would effectively owe them money. We would tell their company the following month that these are the people who have enrolled, just like any other medical benefit or 401k, and saying these are now the new subsequent deductions to take on their paycheck the following month. So with that being said, there's going to be a $120 post-tax premium. This premium is the amount that pays the employee a fixed non-changing $1,130 a month. And then the other benefit, or the other deduction rather, is a $1,200 pre-tax payment, which funds all those unlimited $0 copays with urgent care, prescriptions, doctor visits, things like that. And this $1,200 pre-tax deduction, just like any other pre-tax plan, would lower the amount of taxes from, in this case, from $690 to $388. What this allows the employee to save is over $300 in taxes. And then the cost of the plan that covers everything, as you can see here, is the $120 plus then the $70 being the difference between the $1,200 and the $1,130. So the true cost to the employee on a per month basis is $190 that they actually see come out of their paycheck that the employer takes and then ultimately remits to us the following month. So from this, the 301 minus 190 equals a net increase in pay of $111 that the employee didn't have before, while all those unlimited benefits being covered in full with ever not asking for money up front from that employee. On the employer's perspective, there is of course, the fixed pre-tax funding that the employee funds. This is saving that 7.65% of FICA. So the reduction of $1,200 times that 7% is $91.80 per person gross that the employer is not paying in FICA for every person every month. And due to ERISA limitations that there's some cost to the plan that the employee can't fund, then this $44 here covers things like the TPA, the network, the PBM, the providers. And so after they save the 91, they're left with a profit per person of $47.80 or $573.60 per year forever. So the big picture where this all comes together and why this matters so much is because let's just take a group and let's say it's a 450 person group in Colorado, and we'll say they make $60,000 a year. And the awesome thing is you can plug these numbers into any state for any group, and it's this quick to do it. So what we're ultimately getting at is that for the 450 employees here and the $573.60 that's saved per person per year, it comes out to almost $250,000 that the company has net profited in less FICA that they paid in that year. And then they've given a raise of almost $1.6 million to the employees collectively at about $300 a person or about $3,600 a year. So not only have they massively increased the value of their company, they've given a huge increase in pay to their employees and given every single person and their family access to care where most of them never had care before. So the great thing about this, it's super, super easy to set up. And all we need to get a group quoted and set up is just simply a payroll register, which is just the name of the person, their gross and net wages, and the amount of taxes they paid in for each of the different taxes they paid. So from that allows us then to develop a marketing campaign to the employees, and you can see everything from, the QR code of how they download the app, the benefits that they get, again, how to use it, where it can be used, what it covers, again, even everything, every aspect of the plan, and even like how to complete your HRA. And so all these things are white labeled, designed upfront for that group before the group ever sees anything, agrees to anything, or even needs to roll this out to employees. And from here, then on top of that, we'll also then be able to give each single employee the before their paycheck and then after. So all the employee sees is just that these are the benefits I'm available to receive, and this is what my paycheck looks like. So again, the current pay is, in this case, about $2,500 a month, not paying any pre-tax or post-tax deductions, and then they're paying whatever taxes they're currently paying here. So next month, all they're going to see is a new deduction, which didn't happen before, just like if they had a newborn child and they added that as an additional deduction. This is just a new deduction on top of everything they already have. And then the idea is between the federal withholding here You can see that dropped almost $100 just for that alone. The FICA, almost another $50, $40 here. And so the overall benefit is that there is a new deduction, the taxes are lowered, and the overall net payment to the employee of this CHAMP benefit ends up being a net increase in pay, although there's more money being deducted versus what they're getting paid. It's always going to be a net profit for them. So to really put this in perspective, the whole big picture with this is that for somebody that's on a current group plan, just to kind of show you the magnitude of why this is so important, is that let's say a group of 50 people, which this group is here, this group got a $63,000 increase in premiums for their overall group. And what we were able to show is using Cigna, which is another carrier that acknowledges and has decades of underwriting experience with all the different clients that we have, that they were able to show that all the different claims that are basically being absorbed by CHAMP aren't going to hit their major medical plan. And so now Cigna is realizing that we're only covering hospital stays, surgeries, cancers, major expenses like that. So just from that alone, we got a $100,000 discount in premiums just from that. And then when you factor in the tax savings to the company, the tax savings to the employees and their overall take-home and pay, and then the benefit of all those claims that CHAMP covers that's all offloaded, of this $531,000 for the total premiums for this year, $274,000 of that was left over. So with how their plan was set up, they actually benefit not only with CHAMP, but on their major medical that they are now have almost $250,000 that they're getting back at the end of the year as a refund, and thus about a $500,000 savings from what their current premium would have been to what their current plan is now. So as you can see, they did not have any change of network of benefits, of coverage, of deductibles, of copays. In many cases are significantly better and not impacting anything but a net value for everybody involved. So hopefully that all makes sense. And the idea on this is that, of course, that we are going in having a net positive upfront, and only after the employer has saved that money do we ever ask for portions of that plan to be covered to pay for all the benefits. So I hope that was insightful and useful, and I appreciate you guys' time, and we'll talk to you soon.